Hi, this is Charlie giving you Wednesday's video. I hope you're very well. Can you make money from the markets on random events, on completely random outcomes? That is my question I'm posing to you this week. So, completely random outcomes, can you do it that way? Before I go in any further, one thing to mention is I'm away on holiday as of Friday, so I'm away for a week or so. So I'll be back the week after next. Anyway, can you do it? Well, I set to task last week and was chatting to some of our members about just this very subject. And so, whereby it's been proven in the past that you can actually take a market like the S&P 500 and using like a randomizer tool, whatever randomizer you want to use, you could flip a coin and flip a coin each day, or you could use like a randomizer itself. I'm going to go through all this with you, and providing you've got a certain risk and reward profile, can you actually make money with nothing else? No technical analysis, nothing else. So anyway, I was discussing this with our members in the trading room just last week. I'm going to go through some of the information. I'm not going to give you everything because obviously this came out of our trading room. What was interesting is some of the results. So I'll go through the results, then I'll come back and talk about what actually we did. So taking a random long or short each day. So I'll give you some of the information. So at 3 p.m. each day, so that's 3 p.m. UK time. So that's half an hour after the market open in the US on East Coast time. So half an hour after the US open. So that's 3 p.m. UK time. Basically flipping a coin, saying, right, is it heads it's long, tails it's short. Or you can actually use a randomizer software or whatever. Some charting software like MT4, you can have this built into MT4, or you can just use an independent piece of software. Or you could flip a coin. Anyway, does it work? So if you've got a given risk reward, taking a trade at 3 o'clock every day and using the ATR. So I've got an average true range down here. So the average true range of the S&P is 33 points. That's on the daily charts. So taking that information, using the daily range and then figuring out based on that average true range, basically a risk profile. So is the risk going to be 33 points, or it's going to be less than that? I'll give you a clue. It was less than 33 points. And then the reward. And the reward is based on a multiple of the risk. So is it like 1 to 3, for example? So I'll give you that as an example. That is not what we came out with. We actually came out with some of our members did some calculations on this. I'm not going to give you all that information because, like I said, we work on this stuff in our members room. But it's just a great exercise really to prove the point. Anyway, so take an average true range. Just the 3 o'clock, letting basically the markets open, do their thing in the first half an hour, and then basically the randomizer just says long or short. No technical analysis, nothing. So each day, and the difficulty is if you're someone who's got a lot of experience in the markets, it's difficult when the randomizer says go long, and you're thinking, yeah, but surely this looks like it's going to go down. You have to just go with it. Anyway, the results came through that. And one of our members did a load of testing on it over the last 10 months because he only had 10 months worth of intraday figures because obviously he had to get hourly charts or whatever. So over 10 months, but then I'll tell you a little bit more here. Over 10 months, the average return on £1,000 investment, so to speak, £1,000 account, was about £500. Okay. Now, so why is it an average? Because what he did is he ran the randomizer 20 times. So although it was 10 months worth of backtesting essentially, he actually ran it 20 times because obviously every time you run the randomizer, it's going to come up with a different sequence of events, just to prove that even over the last 10 months, it's not just a single data set; it's 20 data sets. And so the average was, like I said, £500, so like a 50% return over that period. So I'm not giving all the information away. I'm just giving you some food for thought here. Now, the interesting thing, which when I went through this with them, is that the risk reward is actually the win rate is actually quite low. So the win rate came out at about 25%. I think it was something like that. 25%. Might have been 24%. It was 24 or 25%. So it's a very low win rate. And so for a lot of people, they wouldn't be able to cope with such a low win rate. But the risk reward's good. So when you have your winners, they pay, a good amount for your losers. So what I'm doing here is I'm just laying it out here to prove to you that we use various elements of technical analysis, but the markets are random in many regards, and you can use your skills as a trader and certain types of technical analysis and take in all sorts of information. But the bottom line is, if you've got a good risk reward profile, you can still make money in the markets. That's the bottom line here. This by using this as an example, and I've come across this years ago, and there was a guy who was a friend of mine who was an ex-HSBC banker, trader HSBC, and he did it. He's a very, very clever guy, retired at the age of like 45 or something from the bank, and just sat at home and just did something based on this principle. He was doing it on the Dow, but this was a few years ago. And so I put it to our traders, and this is some information of what they came up with. So now, can you actually make it better? And that was my next question to our traders, because if you can come up with something like this, now obviously 10 months isn't enough, but don't get me wrong, it's still run on 20 different outcomes. It was run 20 times, so different outcomes on every one of those times, just to prove that actually it does come up. Now don't get me wrong, it didn't come up at £500 every time on every one of those 20 instances. I think the worst performance out of that whole lot was -£3. That was the very worst. The best performance was plus £1,100. So again, it's going to be a little bit of pot luck there over that short period as to if you just did a randomizer, whether you make lose £3 over the period, or you make over 100%. But you can see my point here. So could you actually turn this into something using the average true range as your base for whether it's going to be, is it 1 to 3, 1 to 4, 1 to 5, however you want to work your risk reward profile. That's something that I'm not giving you away there. But firstly, use a randomizer. So if you can use a coin flip and just say heads is long, tails is short, or you can actually use something. I've literally just done a quick Google search for randomizer. I've put in 1 and 2. So let's assume 1 means long, 2 means short. Generate. There we go. It's gone short this today. Do it again. Short tomorrow. Do it again. Short again. Short again. What's going on here? That doesn't seem right, does it? Oh, there you go. So it's just done about 5 or 6 in a row there of shorts, and now it's got a long, and then another long, and this is completely random, as you can see. So it doesn't matter what software. Like I said, you can use it within charting packages. You can find things like randomizers within like MT4. That's what one of our traders did. So, but can you actually add some element of technical analysis to this and say, well, okay, at 3 o'clock every day, if you do a pure randomizer, then yes, it'll tell you long or short. As long as you've done a load of testing on the risk reward, the ideal risk reward profile. So you know that the average range is whatever, and obviously you've got to base it on the average range at any point in time. What can it be? So you might say I'm going to use 50% of the daily range, for example, and then if that's 50%, then I'm going to look at 1 to 2, 1 to 3, 1 to 4, and see which outcomes come out best. But what if you actually add an element of technical analysis to that as well? So one of our traders also did something like that, and it actually improved the results. So it increased the win rate marginally, not massively. I think it took the win rate up to like 30%. I think it was something like that. But it did improve the overall result. So could you add in something? I don't know. I'm literally just throwing this out there at you. Something like a stochastic, for example. So let's say you put a stochastic onto your chart, and so let's each day, depending on which, you might at 3 o'clock, you might then say, okay, if the 4 hour chart, the stochastic is over 80, then it's going to be a short. If it's below 20, it's going to be a long. And on those days when it's slap bang in the middle, maybe you don't take a trade. Test that. Test it with RSI. Test it with whatever you like. It doesn't matter. Don't even have to use an indicator. You could just say, well, is it above a key? If is it above a certain moving average, or is it below a certain moving average? There's so much you can do with it, but the point is is that you don't have to. You can just do randomized results, and I'd love to see what your input is on this. So by all means, do come back and give us some comments on this and feedback on this if you wanted to go and do some testing on it, because it's very, very simple idea, and but it proves that you can make money from the markets. Personally, would I do it on a randomizer? No, because it's just counterintuitive to my 20 odd years of experience now to then just put my experience to the side and just, it's not that I wouldn't trust it, because the figures speak to them for themselves, and I've known this from before, but it still feels like, well, where's my value add? So personally, I wouldn't, and for a lot of people, having such a low win rate, they wouldn't be able to deal with that. But if you can, and you could just like say, well, do you know what, I've done some testing myself, I'm just going to put £1,000 on that, and I'm just going to let that trade every day, or whenever it sets up. If it's every day, if it's purely on a randomizer, it would be every day at 3 o'clock. I'm just going to do it, and I'll do it in a separate account, and I'm happy with that. So there you go. I'm throwing that one at you today, just to prove that the markets are in a way random, in that you can make money without using fundamental analysis, without using technical analysis. If you've got a certain risk reward profile, then you can actually make money from the markets. That's me done for this week. I do hope you enjoying this volatility we're having at the moment. Finally, we're starting to see some pickups in the currency markets as well. I'm not going to do any analysis right now. Kim does analysis every day from his perspective. So I shall leave you to it. I'll see you soon.